Hi there, welcome to Grain TV. It's Tuesday, July 5th. After the long holiday weekend, we had a really down day in the grain market. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, beans losing 55 cents on front month August contract, while November was off 60 cents. It was a brutal day in beans. Corn losing 10 cents and wheat gaining 2 cents a bushel on fairly lackluster news. Really the news today is all focused on weather. Not surprisingly, as we come out of the long July 4th weekend, traders react usually sharply to whatever the weather over the weekend, as well as the forecast going forward as we enter into the key pollination stage, especially for the corn crop. And this weather forecast that we're seeing right now looks to be very favorable. We had good rains over the weekend. As expected, going into the weekend, we were going to see some good rains, and those rains materialized in much of the Midwest. And as we look forward, there's no real lasting heat. There are some moments of heat, but overall, the moisture profile looks to be very favorable as we go forward, not only this week, but early into next week as well. So that really is the driving force right now. Yes, there's some demand news to talk about, but overall the market is really just trading weather forecasts at this juncture. Speaking of demand, let's talk about export inspections that came out today, delayed due to the holiday on Monday. Export inspections for corn were within analyst expectations, coming in at 1.1 million metric tons versus 1 to 1.3 expected. Beans on the light side at only 191,000 versus 200 to 400 expected, and wheat just besting the high end of analyst expectations at 560. So overall, nothing to really change the course of the market here, especially in the case of beans, where we had a negative export inspections. We have good weather, and on Friday we should mention USDA's monthly May crush number came in below expectations at 160 million bushels versus 162 expected. So overall, the bean market is really starting to show fatigue, really starting to trade lower. Let's take a look at the export scorecard for the year, old crop marketing year of 2015-16 for corn and beans. And overall, what we're seeing, even though corn is picking up pace, we're still below the mark we need to reach USDA's export projections. So keep in mind, USDA is calling for a 2% drop year on year in exports for corn. Right now, our pace so far compared to last year is off 5%. In beans, we're off 7.5% versus USDA looking for about a 4.5% drop. So we're still trailing the pace we needed. I think with corn, at least we have a very strong momentum here going into the end of the marketing year. With beans, not quite as strong. We're seeing a real tail off in export inspections, like this week, where we came in at only 191,000 metric tons. So we're going to need to pick that up to get close to the export that USDA has pegged so far. Let's take a look at the trade action in Nove beans. This is what probably most farmers are looking at right now as they're thinking about the new crop situation. Again, we had a holiday weekend. We did not have trade overnight because of the holiday, so we actually got our first moment of trade this morning at 8:30 Central Time, and you can see we gapped lower on this 5-minute bean chart, starting the day on Friday, or closing the day on Friday around 11:38. The first trade around 11:30, and we quickly made our way within 20 to 25 minutes below $11, and we never got above that mark the whole time. And you can see just flat line here, closing at the lows of the day, no real bounce off of that lows, which tells you there's a lot of longs trying to get out of their positions. They're just liquidating. Anytime there's a rally, the longs are trying to get out to salvage any sort of profits. As we look at sort of a longer term chart here, daily November beans, you can see this 1070 mark where we're trading at about now on the close is what I think is a critical support. We were overhead resistance going into this rally. It served as a key support or key resistance mark. We did clear that mark back in June, and you can see we are trading back down. So that one-time resistance is now going to act as support, and we're going to watch that number to see if it's going to hold as we enter into the overnight session and into tomorrow's trade. So watch for that 1070 mark. If that falls, probably the next mark down is in that 1020 range where we also had support and resistance coming to confluence there. That's all we got today. If you have any questions about how we can help you in your own grain marketing situation, by all means visit us online at grainhedge.com and take a demo of our trading platform to see how our intuitive platform can help you in your own grain marketing hedging situation. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.